I have had a very fun and successful career so far in the investment business, which started in the 2002 recession. That's when I started working. So I've had, it's not a long time. Some people have been in the business since the 80s. So okay, I'm not that old, but I'm pretty old now. And I can tell you that I have not made money by guessing time. Like, that's a really difficult thing to do. What I've made all the money I've ever made, what I've made doing is saying, seems like a good time to do this. And so I'll do this. And then sometimes it works quickly, sometimes it works slowly. But in the case of the gold market, I look at the royalty companies and I think to myself, you've got to be crazy to not be involved in the royalty business, because you have no employees and you have decades of exposure to new gold mining coming in. When people say, I'm never going to touch one of these gold mining stocks again, that's when it's cheap. All right. That's how you know it's cheap. And it hasn't happened in the crypto space yet. But anyway, I just want to help people understand how I think about these things, because I don't know sometimes if people understand that the way you think is what dictates your success. That's where the real action is. The number one thing that you learn as you become an adult, if you're awake, if you're asleep, then you don't learn this. But if you're awake, is that you slowly start to realize that the government has not done very much to help you. So most of the things that they do have actually made things harder for you. So anytime they say, we're going to help you do something, you have to be immediately suspicious. As we transition into an electric economy, into an electrified economy instead of a economy powered by hydrocarbon sources for the most part, right? As we make that transition, the government has to keep GDP stable, at least, if not a little bit growing, okay? And you can't do that without access to these metals, because you can't build grid storage without copper. You can't build an electric car without nickel, a nice one at least. You can't put windmills up without lithium, as a storage component for the, and I've been studying recently the green hydrogen movement. It's really fascinating, but you can't do any of these things without certain key metals. And China has a lot of the rare earth metals, and Indonesia has a lot of nickel, and they're keeping it. And Latin America has a lot of copper, and it's not treating it with a capitalist mindset, and it's a big problem. And so the governments realize that if they don't have these things, they'll be answering to what I like to call the global south. What do you need gold for? The only reason you need gold, other than for high quality dental work, is to protect yourself against an out of control government, that controls money, which affects your entire life's work, right? I mean, it's a huge problem. That's what you need gold for. And why would you need that? You don't trust us to help you? Do you see what I'm saying? So there's never going to be a program to help you buy gold. The critical metal thing is economic. The gold piece is more about protecting your life's work. And I hope people can see that, because those are two very different things. Why would the central bank say this year we're really negative on the US dollar? We really don't like the United States, so we're going to take some of those dollars and buy a lot of gold. Because they say, actually, we'll tell you that after we bought the gold. And maybe we won't even tell you how much gold we bought. But the point is that what we know is that they are buying gold. And the World Gold Council tracks that. And a lot of groups track that. And it's not one country, by the way. I mean, you have some African nations now saying, why do we have to sell our oil in dollars? Why do we have to do that? Why don't we sell it, and take gold for our oil? And the US says, no, you can't do that. The point is that if they say, when I read the headline that they bought X number of tons, I usually say probably 50% more. One of the things you want to really be careful of as this is all playing out is that the last 10 or 12 years, of the US being kind of the dominant leader, a lot of money flowed into the US. So like when people were negative on the US dollar 2009, 10, 11, they were wrong, because what happened was the US was able to pass draconian laws like FACTA and all these different, kind of circling the fences around. And a lot of money came in to the US, and the stocks went higher, and the dollar, was reasonably strong, and the treasury market was liquid. And now what you're seeing is a lot of that's reversing. So you watch the headlines right now, Microsoft laying off people, Google laying off people. And also, you know what else Google did is they cut all these like moonshot initiatives that they had, like crazy AI projects and things that weren't viable. They cut these things. So my point is that companies, the biggest US companies, which got really big during the last 12 years or so, are shrinking, and the stock prices are shrinking, and money is flowing out. And so when you see this type of transition, you have to extrapolate this and say, if money's going out, then the things that benefited from the money coming in are probably going to get hurt. My point is that you want to look at it and say, as this money goes out, probably the stocks that benefited are going to get hurt. I want to be careful. And everybody will tell you, oh, Amazon, they send all the packages to me. It's the best stock. Yeah, it's a great company. Don't get me wrong. It's not going anywhere. It's not going to zero. Forget about that. But it might not be the best investment at this moment, because it's laying people off. It's dealing with cost overruns. It's struggling to keep growing at the same price that it was growing. And it was benefiting from unbelievable amounts of capital flowing into the US. The same thing with Apple. It's like, remember, Apple's a $2 trillion company. At one point, everybody's hot on Apple, but it's like, look, it's a telephone company. That's what it is. As you shift into zones, you want to avoid. Half the secret to success with money is avoiding huge pileups, like on the freeway, right? So one of the big pileups is in the tech scene, and you want to be super careful. And you will get the chance to buy some of these tech stocks at much lower prices, but it's not today. And so as you go through this transition, you buy things that are going to benefit from the transition, and you get out of things that are probably going to get hurt from the transition. That's the number one rule. And if you do that, you don't even have to be exactly right with the stocks. Like you could have bought a decent energy company, like a mediocre one, and done almost as well as if you bought a great energy company like Chevron or Conoco. Conoco is a great energy company. So those did great. Lesser companies did not quite as great, but my point is they did fine. They had a decent year. So my point is, don't overthink it. Don't say I have to do exactly what you want to do. Is you want to avoid the obvious sectors. Like if you move away from tech short term, don't worry if one tech stock has a great year.